Morning.
Morning, Gav. Nice to see you this morning.
Yes, a nice morning here. The sun's out, which is always a good thing.
Great. You've had a bit of snow down that way.
No, not yet. It's just been raining. Not quite cold. We've only had one frost this year. Usually we've had a half a dozen by now, so still quite warm for this
Oh,
time
okay.
of year.
I
But
thought
they're
the
forecasting it next week.
righto. Well, the resorts certainly need it. There's not much snow on the ground.
Yeah, yeah. Interesting night last night in the US.
Yeah, certainly. Yeah, market sort of the tech sector still very volatile, so that's keeping things very interesting. But our market's got a bit of a positive start. It's sort of flat at the moment, but it's been trying to push higher over the morning, so a little bit of buying sort of venturing in.
Yeah, that's a good thing. A few different ideas this week to look at. I'll just open our screen up here and we can have a look at some new ideas.
Fantastic.
Here we go.
First one we had was in BHP.
Yeah, so I've just stuck it up here on the screen. It's had a pretty good run, but it's bounced, come back a bit in the last few days.
Yeah, got up to that sort of 65, nearly 66 level, I think, as its high. Basically, it's been driven by copper. Copper is now the largest commodity in BHP's stable, replacing iron ore. So, yeah, copper pricing is really going to drive the future for BHP and Rio. Copper's come back a little bit. I've just read some comments out this morning from the World Bank regarding copper supply. They think demand will probably outstrip supply in the next year or two. But this sort of next 6 to 12 months, I think it'll be fairly balanced, but demand is definitely going to remain pretty strong. So copper demand should support the copper price, which in turn should support BHP and Rio's share price. So the idea we had today was looking to sell some puts under BHP. With the stock around $59, I think there's definitely an opportunity to sell a put sort of around that $58 range out into mid-July, the 16th July expiry. We'll be looking at a premium of around about $1.10 a share there, or $1.10 a contract. So if you sold those, you're getting yeah, and got extras, you're getting the stock at around 56.90, which I think would be a pretty attractive price to pick the stock up at.
Yeah, no, it's a particularly with that copper story in the background. If you're patient and you hadn't didn't have it as part of your portfolio, it certainly presents an easy way to get in. A couple of new charts up there probably worth pointing out just quickly. Zach and our team's done an incredible job incorporating live data into one of our systems that spits it out in a format we can use. On the left there,
Yes.
it just shows open interest. So you can see here there's a hell of a lot of open interest in puts around that 54.50 mark there. So a couple
Yep.
of things could be happening. A lot of people selling puts to get into it, and people not believing the copper story and buying puts for a downside move there. Um,
Yeah, definitely.
at that 58 level there, the probability of profits around almost 50-50 there, like whether it'll be exercised or not. But as you said, you'd be happy to get into it for the price you spoke about there. So yeah, nice one.
Yeah, look, I think it's a good one. It's a core stock. I think anything over 60 looks a bit hot, unless copper really pushes on higher again. But around 58, $57 as an entry point, I think you'd be able to certainly pull some premium out of that, whether you look to rise some covered calls if you do get exercise as well.
Yeah.
So
Yeah.
I think a good trade for someone that's happy to be exposed to our major resource sector.
Right. I stuck Woolworths up here and I actually spoke about it again last week. And last week it was sitting around here, but it's had one hell of a run up in the last 4 or 5 days. It was flat when I last looked at it, a little bit down, if anything. But you could certainly look to sell calls if you didn't do it last week. The other trade idea I thought about here was potentially a collar. That's where you would sell the covered call and buy a put spread for a downside move. So because it's run so hard, you might expect it to come back a little bit. So to do more than just to make a bit of money on the covered call, buying a put actually makes money on the downside. So it's something you can consider. If you wanted to sell the 41 call just for income, I had to look at it before. The premium's actually a little bit better than what's there. You get 70% probability of not being exercised, which means straight profit. So that's something
Yeah.
you could look at as well if you didn't do it last week. Interestingly, I don't know if this is people listening to our podcast or not, H, but last week or this week, there's a hell of a lot of open interest in calls around that $40 mark where, again, there's both, that's all open thing. So there's sellers and buyers. So there's a lot of people either selling calls or buying calls thinking it's going to go further. So yeah, hell of a lot of liquidity around that $40 mark.
Yeah, it does seem the sort of the big round number. I would have thought $40 for anyone who's been a long-term holder of Woolies. It would be a dream price from
Yeah.
stock that was probably sub $30 less than 12 months ago.
Yeah.
So I think if you get out at 40, I just don't see where the growth numbers in Woolies add up at present. I don't think a supermarket stock has the potential to grow to justify $40 a share for Woolworths. So I
And
think it's
it's,
definitely a sell. And
yeah.
I love that collar idea. So selling that covered call and then buying a put gives you some downside insurance on your stock, or just the ability to make a profit on a down move.
Yeah, totally agree. I mean, it's 12 odd percent above its average price target, so it's way above where it's expected to be. As you said, I'm not sure where growth can come from here on in. So yep, that's a one that sticks out.
Yes. Mate, now a bit of a sad day for us today. This will
It
be
is.
your last podcast.
It is the
You've been
last
snapped up.
podcast.
The popularity of the podcast has obviously seen you exposed to the world, and you're heading off to greener pastures.
Yeah, I've thoroughly enjoyed my time up in iInvest. It's been over 5 years now. I've been working up there, and really, it was a real privilege to work with the team up there. They're a great bunch of people. They really do care about the clients. They do the work is the main thing I've noticed working up there. HP, the team up there
Yeah,
does the work, and that's what the clients really want to make sure that they've got people covering their back that have their back. And yeah, it's been a great opportunity to work up there.
yeah, well, mate. Well, look, best of luck with your new venture, and maybe we'll get you on as a guest in the future one day.
Maybe if we come back and talk about flying or something.
Sounds good.
Right.
Have a good week, Gav. See you,
Thanks,
mate.
mate. See you later.